Hi, everyone. I think we'll just give a few seconds or a minute or so before we get started. All right, I think we're just waiting for a few more people. Fantastic. You'll see Simon just popped a message on the live chat. I'd welcome you guys to please make use of it. This is going to definitely be a collaborative event. All right. I think just a few more seconds, a minute, then we'll get started and talk about gold. Okay. Just waiting for a few more people. Hi, guys. Hi, John Brandon. Hi, Otney. Thanks for joining us. I hope everything's good. Is the sound good? The video good? A thumbs up on the live chat. We're good. Hi, Bryce. Hi, Rail. Thanks for joining us, guys. It's good to see you using the live chat. All right, this is fantastic. All right. I think we're just going to wait for a few more people to come on, and then without further ado, we'll jump into it. All right. If you are on, pop a thumbs up or something on the live chat. There we go. Fantastic. I recognize a few names there. All the way from Amsterdam. Fantastic. It's definitely a lot hotter here in Stellenbosch. All right. Cool. Guys, I think that's it's a good time to get started. I just want to welcome you all to the first Troygold webinar for 2021. I'll introduce myself just briefly. I'm Dane Viljoen. I am the co-founder of Troygold. As you'll see, the requisite startup t-shirt. I am the co-founder and chief sales officer of Troygold. And I want to maybe just give a little intro on the idea of webinars this year and what we're trying to create. I think we want to create a space where we can have discourse around gold, the physical metal, and around current economic events, and what that means for us as individuals, as sovereign individuals and individualists that are trying to protect our wealth and plan for the future, both financially and personally. And I think what we're going to try to do in the next few weeks is get a few great speakers on our webinars, just talk about these matters. You would have seen last year we had Russell Lamberti talk to us about South African government finances, and it was really well received. And I think we're going to have him on to talk about inflation. And so you guys should just have keep a lookout, and we'll let you know as and when they come. But we're going to try and do it frequently. We want to get the conversation going. We want our tribe of liberty-minded and gold lovers to start talking and to start having discourse and to have a safe place where we can speak our minds. Today, I'm just going to start off two parts to the webinar. First, I'm going to run through a short presentation. I know Simon made this an hour-long presentation or an hour-long event. I'm going to try and be very quick. I don't want to keep you guys for that long. Your attention is valuable, but I think it's going to have two parts, just a short presentation on why we believe physical gold is the tool for financial freedom, and that it will allow you to decouple yourself and your savings and your wealth from the external events and parties that rob the value of your savings, i.e. inflation, government spending, and market volatility. Thereafter, we're going to have a quick Q&A. So whilst I'm talking, feel free to jot down a few questions on the live chat. We'll come back to them at the end. All right, I'm going to jump into the presentation, and I hope it's all good. If you guys can see it. All right. I'm going to ask Simon just to give us a thumbs up. Or guys, just give us a thumbs up if you can see the presentation. All right. We call this, okay, so we're Troygold. As you may know, we are the physical gold fintech company. We started in 2018, and our goal was effectively to add financial services to gold, to allow gold to become once more a monetary medium. And today's presentation is what we like to, is what I'm naming is banking on gold. So what's our vision? Just briefly, quickly, we want to provide financial freedom through physical gold. We are creating the tools to bring history's oldest form of money, gold, into the digital age, and to compete with and even function alongside fiat currencies in the modern banking system. So in so doing, we wish to provide you with a choice. Right now, all you have that you can save in is government-issued fiat currency. But there is an alternative, and it's the original alternative, the original Bitcoin even. It's gold. It's the choice to be free from currency debasement, inflation, boom and bust cycles, and value erosion. So what we're doing at Troygold is we're building a tool for freedom, for financial freedom. And we want to welcome you, and we want to invite you to choose gold. Why do we want to do this? Effectively, we believe the era of unbanked fiat currencies are coming to an end. We see booms and busts. We see news of negative interest rates around the world for the first time in history. We see stimulus programs, as they like to call it. We see market crashes happening. And all of these are symptoms of a financial system that's built on unbacked fiat currencies. These can be created out of thin air. And what we've seen in the last decade is the market looking for answers. There's been a resurgence in the topic of money. We've even seen the rise of digital currencies in Bitcoin, for example. But we believe the answer lies buried in the pages of history books and in dark vaults, completely removed from the modern financial world. The answer to us is gold. And the answer to bring back gold into the digital age in its role as money is what we're trying to do. Just briefly, what is money? In history, humans have used a number of things as money. Commodity money started as salt, cowrie shells, cow hides. But in recent economic in the recent economic age, we've seen gold as the foremost economic money for the past few hundred years. But since 1971, we've seen the rise of fiat or paper monies. And more recently, since 2011, we've seen Bitcoin come into play. But there are three things that a money needs to do and be. It has to be a store of value, a medium of exchange, and a unit of account. So all of these things that you see right now on your screen can function as a money, but there are certain things that are better than the rest, namely gold. And it's because it has a store of value to it. So your currencies today, cryptocurrencies, can act as a medium of exchange, it can act as a unit of account, but the one thing that it lacks is a store of value. And this is why when you earn your hard-earned savings, you try to go and invest it usually to beat inflation, because these currencies can't store value. But why is gold such a constant store of value? Well, it's actually quite simple in number terms. The annual mining output increases the gold stock of about 1.6% a year. World GDP grows at about 2.9% per year, and the world population actually grows at roughly 1.1% a year. So the stock grows with the economic activity of us as humans, and that keeps the value pretty constant and inflations. But there's another reason gold has been the preferred money for 6,000 years. This is a mask of the boy pharaoh Tutankhamun. Now, this mask is solid gold and dates back to 2000 BC. That's gold that's been sitting in the dark for nearly 4,000 years, and it's untarnished. So gold's elemental properties, that it is the immortal metal, it is of the noble metals, it is the scarcest and is the immortal one. So it is the perfect element that humans know to store value across time. But what about these things? These paper tickets that we're used to, right? They didn't start out as unbacked paper fiat currency. They were actually receipts for gold. Banking started by a form called bailment, where goldsmiths actually held people's gold coins. And because gold was clunky to walk around with, they started issuing these bearer receipts. And you could go to the bank and you could hand in your receipt and they would give you that amount in gold coin. So this is a gold certificate, or the early US dollar. And it is a $100 in gold coin, repayable to the bearer on demand. So when you walked into the bank and you issued and you gave and you provided this paper money substitute, as we call it in economics, then you were handed that amount of gold coin. Now this is a great marvel for technological advancement, because it allowed commerce to expand. And effectively, this made the dollar or the pound sterling, where these were just units of weight of precious metal. A pound was a pound of sterling silver. The dollar was 1/20th of an ounce of gold. These were substitutes, but they were effectively as good as gold. But that all changed in 1971, obviously, when Richard Nixon, the US president, or as people call him, the man that sold fiat currency to the world, decided to take the world off of the gold standard. At this stage, and in the period after World War I and World War II, the US had the largest gold stock in the world because they were selling all the armaments to the Allied nations. And effectively, we had a monetary system that was backed by the dollar. But because the dollar was convertible into gold and as good as gold, it became the world's reserve currency. And still today, it has the world's reserve currency status. But after 1971, Richard Nixon stopped the convertibility. And obviously, because the US government at that stage needed to fund the Vietnam War, or the period after the Vietnam War, and the world realized that there was a lot of inflation in the dollar coming, and they were looking for their gold. So what's backing the dollar now? Effectively, just air, or alternatively, confidence in the issuing body. And the issuing body is the American government. It is the confidence that they won't print too much of it. That's effectively the value of the US dollar today. So let's see how well that's going. The US, a state has a certain model with which it holds onto power and it utilizes its power. It likes to spend, and we call this the wealth transfer model. It issues its citizens who have faith and confidence in their state dollars. And on the left, you'll see the new US Fed chief, Jerome Powell, with his money printer on the latest meme, where they can now print money out of thin air to any amount. They effectively, they push dollars to their citizens and to the rest of the world. And what happens is they can strip out wealth, or they can usurp and transfer wealth to them to use as they see fit, whether it's funding wars, whether it's funding stimulus packages, or special interest groups. There's a really smart philosopher that we like to read up on a lot. His name's Naval Ravikant, and I urge any liberty-minded person watching to go have a look. He actually posted a tweet, I think it was yesterday, and I call it The Road to Serfdom, and there's actually a book behind me called The Road to Serfdom by Friedrich Hayek, and I urge anybody, if they've got time for mundane reading, to give it a go. But effectively, he says that the road to socialism is via inflation, via this mechanism of printing money. You print money, you crash the reserve currency, or the value of it, which means you destroy savers. People holding those pieces of paper, their value gets transferred away from them and into the hands of the state. And
you force them into inflated assets. We've seen the rise of Robinhood and the day traders from Reddit and in recent weeks. So you start forcing the populace to start taking bets, to speculate, because the value of their store of value isn't holding. So what ultimately happens, asset inflation happens, stock market bubbles happen, and it leads to inequality. You then demonize asset holders and tax the nominal gains, thereby confiscating the real value of the assets. Why do they do this? Well, it's nice to spend. I kind of like spending, is what I would say if I were in the position of power. Now, this is the federal US government's total debt bill. Since effectively, I've taken it since 1971 when the world went off the gold standard. Now, you've seen it balloon, but particularly in two periods to the right of this graph, around the great financial crisis of 2008, you saw an inflection point upwards drastically. But then in 2020, we've seen almost a vertical sprung of debt taken on by the US government. They want to spend and they like spending. So what does that do to the value of the dollar? And how do they do that? Well, governments do that using free money. This is the yield or the interest rate on 10-year US government bonds. Again, I've taken it from about 1980 when the US was in the bulky years. And what you've seen is it just coming down and coming down and coming down. They've driven down the price or the cost of borrowing because they want to spend more. And it's sitting at just under 1.2% at the moment. But how do they do that? Well, they use friends, of course. They use the Federal Reserve. This is the M1 money stock in the US. Now, the M1 money stock is just a very narrow measure of the amount of money in circulation, the amount of coins, the amount of currency and demand deposit in circulation. And again, we've seen a hyperbolic increase since the 70s when we started fiat currencies. There again, 2 points where the great financial crisis in 2008 created an inflection point. And what you've seen since 2020, when the COVID crisis hit, is there's been an almost vertical leap in the quantity of money. And the Fed has actually increased their balance sheet by about 40%. Another way they do it, using the Fed, is they ask the Fed to set the interest rate, right? So they want to never pay back the money. How do you do that? Well, you make the price of money near zero. This is the effective federal funds rate in the US, and it's the rate at which the Fed basically borrows money to its member banks, and a benchmark rate for the government to issue bonds that the Fed then buys. You'll see that it's been coming down ever since the 80s and the 70s, and after 2008, it's been near zero. You will remember that in late 2019, they tried to normalize interest rates and bump it up a little bit to the 2% mark. But what happened was the equities market fell through the floor. So again, what do they have to do? Take it back down to zero. So right now, if you're holding the US dollar or a government bond, you're almost at 0% interest rate. This is free money for the US government. But a little something closer to home, as I know a lot of us are watching here are South Africans, and we're holding the South African rand. But this is SA government spending. Now, like their counterparts, they love to spend as well. Ever since 1971, since we went off the gold standard, we've just seen a monumental increase in government spending. Now, this 600 billion rand budget that the US had, that the South African government had spends sounds small. However, the important thing to keep in mind is the following metric, and that's the debt to GDP. And this is the dangerous one. This is effectively saying, how much debt does the SA government have in relation to the production of our country, productive capacity of our country? And since 2008, you've seen it go from less than a third to almost 2/3 of GDP. Now, there are a couple of economists that start raising the alarm bell
when you start seeing more of a 40-50% debt to GDP ratio. And they usually say that there's a currency reform coming within 3 to 5 years when you start seeing these types of levels. So we can't necessarily predict the government spending going forward. But what we can do is sort of look at it from a more practical level. What is this doing to us on the ground? Normal citizens, productive units of the economy. Now, this is a slide, it's my favorite one. I call this priced in gold. And we've had it in one of our newsletters before, or one of our blog articles. And we took a snapshot of the prices of consumer goods and normal things in 2008, before the financial crisis, and then in 2020. You'll see that on the left, we price things in South African rands. On the right, we price things in gold. So if you think about buying things in ounces, literally, and what you see is if you're buying, for example, milk, it was R8.46 in 2008. It's R16.70 today. That's a 97% increase in price or inflation. Loaf of bread, R5.89 to R13.60. And even the stock in this index, our mighty JSE All Share, has increased 141%. Therefore, it requires 141% more rands to purchase that basket of currencies. But as you've also seen, the gold price has gone from 6,200 Rand to 27,000 Rand per ounce. And if you price these things in gold or in ounces, you would have seen that things became cheaper. Effectively, roughly about 50 to 55% cheaper. On the right-hand side, particularly the stock index, it used to cost you 4.41 ounces to buy the basket of JSE All Share stocks. And today, you can buy it for about 2.44 ounces. So shares, household consumer goods have gotten cheaper when you're looking at it through the lens of gold and when you're using gold as your monetary medium. And if you look at the almost doubling in price of the rands and the halving in price in gold, it's easy to see because if you look at the bottom, there's 1 Rand in 2008 is effectively 1 Rand 91 in 2020. So it's lost almost half of its value, the South African Rand. So what happened in 2020 with gold? If it's so valuable, what did we see? Well, we saw exactly what we predicted we were going to see. People aren't stupid. They protect themselves. They safeguard their wealth. And they do it still in gold. So on the left, you would have seen that Russia and some of the Eastern Bloc countries, a lot of the Middle Eastern countries, and China are having an insatiable desire and appetite for gold. They're buying bullion by the boatload. And they're effectively de-dollarizing themselves. They want to get away from the US dollar because they realize that money printer is just running off of the hook. So for the first time ever, Russia's gold reserves make up more than their US dollars. And we've also seen from a retail investor perspective or a retail buyer perspective, saver perspective, that the COVID-19 crisis in 2020 and the record-breaking government spending has been a boon for gold investing. We've seen record amounts run into the gold coins, gold bars, and gold ETFs. We've seen about 770 tons last year running into gold ETFs, and in total about 1,800 tons of gold being purchased by investors. So people are opting to safeguard themselves and decouple themselves from the money printer, and they're doing it with physical gold. But people say there's a problem with gold. People say there's no yield. Well, that's simply because gold is money, like we've said. It's been the best form of money for 6,000 years, and we almost have to think about it as money. The yield or the increase in the price that we see on the app when we are a gold owner is effectively just the fiat currency or the native fiat currency losing value. So gold doesn't have a yield, and it shouldn't, because money doesn't have a yield. The US dollar doesn't have a yield. Gold shouldn't have a yield. And it's because there is no counterparty risk. There's no risk for storing your value in gold. So That is a completely false problem. But there is one problem that we see gold as being. In the modern era, gold has literally been in the dark, right? This is a safety deposit and a bank vault facility in Switzerland. And what people are doing is they're putting their gold value, or they're hoarding their gold in these facilities for safekeeping. It's unsafe to keep it at home. And as you know, that's effectively what Troygold's savings pillar is. The problem is that we're storing a lot of value, a lot of money in the dark, and it's not being used adequately. We can't use it in the digital world in our day-to-day life. So what we want to do, we want to provide another solution. And this is what we're embarking on in 2021, and what we've been working on for 2 years, and we're really excited to start introducing. So what Troygold is offering is a digital, fully allocated, physical gold savings account with global spending capability. You'll see the mobile app, a Troygold debit card, as you have in your normal banking, and it's backed by, in South Africa, the 1 ounce Krugerrand bullion. Now, Troygold, so effectively what this allows our retail clients to save and spend their physical gold in any quantity. So just as you would your rands deposited into, for example, a bank account, and you're used to spending it, you now have an alternative. You can now do this with gold. As we like to call it, you can live in gold. So you can save and spend in physical gold outside of the financial system. So there are two pillars to this. Obviously the save pillar and the spend pillar. You guys all know our save pillar, and this is what you've been used to. Our technology, or our fractional ownership technology, takes a vaulted bar or coin that we vault, that's fully insured in a precious metals vault in South Africa. It's in Johannesburg, and it's 1 ounce Krugerrands. And in Singapore, we hold 1 kilogram bullion bars as well. So we vault a bar or a coin, and effectively we digitize it. Every Krugerrand that comes in gets a unique ID number, and you will know that from your gold certificates. It says KA100, KA110. Or when it comes in as a bar, there's a unique serial number as well. Our technology can digitize it and place it on this application. So the Troygold mobile app is a portal to the vault in the dark. And when you buy or when you sell, you can sell any amount. So whether it's 1 rand, 10 rand, $1, or a full ounce or a full 1 kilogram bar, you can do so. Complete flexibility, complete liquidity, both on buying and selling. The mechanism to know that we're really proud of is our ownership certificate. You will know, as clients of ours, when you have purchased, you get issued a gold ownership certificate, which shows you exactly how much you own, in which bar or coin, and where it's stored. And you can verify that on our audit page on our website. This is our new gig and our addition to complete our product, and that's our spend function. We're introducing a gold-backed debit card, and effectively what this allows is it allows you to live in gold, spendability and liquidity. So your physical gold holdings is linked to this debit card. It adds the utility of spendability to previously an idle asset that's been in the dark. And it now, for the first time in probably a bit more than 100 years, especially in South Africa, it allows gold to function as a money once more. So whether you're buying a coffee or exploring our safari destinations with ease, what you can do is you can decouple yourself from inflation, from political agendas, from the State of the Nation address. And you don't have to worry about your purchasing power because you're in history's sound store of value, gold. You're safe in the universal, time-tested money of gold. So some of you asked us, what's the pricing model? And how much does this cost? Well, there's been a few issues in physical gold that we've tried to solve in our pricing model. Number one, there's always been an insurance and a storage fee we're keeping this gold in highly secure precious metals vaults. So how do we deal with that? And how do we price that? But today, we're all used to subscription models. We want efficiency. We want a digital world where we can pay one price and we know everything's covered. So we wanted to do that. And what we've come up with is a subscription model for your physical gold account. So we have 2 account tiers that we're issuing, the gold account and the Troygold premium account. Now, the main difference is the gold account is just if you wanted to come onto the platform and buy and save in gold. We're actually seeing people come on monthly, especially in South Africa, buying 500, 2,000, 1,000 Rand, and I think our average is about 6,000 Rands worth of physical gold and accumulating their gold wealth every month. So if you want to do only that, sure, get our gold account. It's actually free under a quarter of an ounce. So up until 0.25 ounces, it's completely free. Thereafter, because you're in gold, we've priced it in gold. We've made it seamless. We want to have you enter the world of gold and almost see everything priced in ounces. So it's about 0.15 gold grams per month. And the main difference between the 2 accounts is if you want that debit card, then you have to opt for our premium account. It's slightly more expensive. It's 0.25 gold grams per month, but it's still a very small nominal fee when you take into account one key thing, that your storage and insurance fees are included. There are limits, of course, if you're looking to store an enormous amount of gold. There is a pricing differential. But for our normal customer, we are really proud to introduce free or included storage and insurance fees in your monthly subscription model. So that being said, we want to have our community talk to us, and we want to build a product that people want. So you'll see pretty shortly that we want to add collaboration, and we want your data, we want your feedback on what we're delivering today. So how do I get started? People ask. 3 simple steps. All right. You would have noticed there's a brand new Troygold South Africa app out, and that's because we not only brought a new product to our offering, we redeveloped our whole app. We try to fix bugs, we try to make it smoother and cleaner. And at the moment, our product offering is unique to South Africa, the card and the app. So go to your app store, Apple App Store or Android Store, and look for Troygold South Africa. Download it. Inside the app, you'll see your savings account, your savings tile, and you'll see a card tile. And if you hit it, we want to welcome you to be amongst the first to pre-order your card. We foresee that the cards will be here in SA and ready to ship in about 6 weeks' time. So we're really excited, but we don't want you to wait, and we don't want to wait. So this is a South African first, and we want you to go ahead and start pre-ordering your cards. Tell people about it. If it's something you like, if it's people that you know that are liberty-minded and that like the idea of an alternative to fiat currency, pre-order your card. We're going to make this exclusive. It's going to be a tribe of physical gold owners, of Trojans, that are living free and living in gold. And number 3, we want you to join the conversation. We've just started a Telegram group, and we want you to join our Troygold community. So Simon is going to post the link on the live chat. We will also be sending you guys an email with the Telegram link with this after the webinar, and you'll be able to access the Telegram link from there as well. And another thing, if you wanted to pre-order your card from our website, you can do that as well. So we hope you want to get started. We welcome you in. And if you want to contact us, you can go to our website. We're on social. You will be seeing a lot more of us on these webinars and on YouTube. We're excited for this. We're excited for this year that no matter what happens outside, there is a tool
that allows us to safeguard our wealth and find our financial freedom using gold, using physical gold. And if you want to get hold of me, feel free to call me, email me directly, dane@troygold.app. Our website is www.troygold.app. Great, thanks for listening. I think that I'm back. I think that you should be able to see me. And that was 35 minutes, so I hope I didn't bore you guys to sleep, but we're really excited, and we just want to thank you again for listening. It's a great privilege, and you will see we are ready for the year with our William Wallace Freedom poster, and I think it's a good time to go to Q&A. Like we said, we want to build a product that people want and that our clients want. So join the movement, and let's see if we can spread the word and start. Let me see if I can answer a few questions. All right. All right. Let's see. Dean Lawrence over here. Can I use the Troygold card overseas while currency while in South Africa? Basically, if I understand the question correctly, where can you spend it? Will you be able to use a credit card in an institution? Well, it's a debit card, so it links to your gold value. It's not a credit card, but effectively, it will be able to be spendable anywhere where there's a Visa or MasterCard terminal globally. So you can be an international man if you are, if you are working offshore, but it would still be tied to your Krugerrands held in Johannesburg. So you will, when you do spend, you will be making use of your foreign exchange or your discretionary allowance, which is about R1 million a year, if I'm not mistaken, that you can spend with your card offshore or make use offshore. So that's the one. Hatni asked, how is the price of gold determined? Well, that's a fantastic question. So what we also saw in 2020 is a big difference between the gold price and the price of physical gold. Now, we all know that the gold price is that little ticker we see on news agencies and news screens all around the world. But that is set, that's basically a 24-hour market. It's what we call the paper gold market or the futures market. And that's in the financial markets, and that's basically people looking to buy or sell gold into the future. So they're buying contracts, they're buying paper contracts that have an underlying backing by gold for delivery. But there's been, you would have seen, JP Morgan was fined $900 million this year for trying to manipulate that price. There are a lot of big bullion banks, as we call them. So your big banks, Goldman Sachs, JP Morgan, the ones that actually handle gold bullion in the London market, that use financial instruments to affect the gold price. But that gold price is basically a benchmark that you can buy, that you can use to look at the physical price of gold. So the physical price of gold, or the price to get your hands on physical gold, is always at a premium to that gold price, because, and depending what type of gold, because there's minting, or there's casting costs of a refiner. So that market is more natural and it's more free. And what you see is that because that's the gold standard, is you've got that unencumbered no counterparty risk ownership of physical gold. You got to look at the supply and demand of that market. Can you get your hands on physical gold? And that's more the true price. And that's just supply and demand of investor demand versus supply of the gold price. That's really supply of gold mining and the gold stock in the world that's really affecting that. And what we saw in 2020 was, again, a record price for gold, for the physical gold. And we actually saw a shortage of gold because the gold price was lower than the price of gold. So the market forces determine more the price of physical gold, and I would say look for that. We're really proud that
when you buy from us and you store with us, that price is the best that you could, if not close to the best, that you could acquire physical gold with. So we're always the physical gold fully allocated person. All right. Let me check the fee per month at the current price for the premium account. Patrick James asked, is around 220 Rand. That's correct. I think a gram of gold is about 90 Rand, something right now. So what we wanted to do is, at least initially, what we wanted to do was to make it competitive in terms of what you're used to paying with your current banking account. I mean, in South Africa, you're spending between 70, 300 to 500 Rand for a bank account. The difference is, though, is that we're holding physical gold, so there's storage insurance costs, but we wanted to bundle it all in, and we want to make it a no-brainer. We want the alternative to be a no-brainer. So that's about the price per month, all-in price that we're offering the service or the product for. Dean just quickly asked a follow-up question, so I would be able to transfer overseas currency to buy gold here through the app in SA. When you transfer money, you're obviously in the banking system. So when you buy from us inside the app, you will see that it's a South African bank account that you pay in, and you pay rands in because you're buying Kruger rands. If you are buying in our international platform, then you're paying USD into Singapore to buy your gold. But like we said, at the moment, the card offering is exclusive to South Africa. Jared asked, why should I want to get a Troygold MasterCard? I think the value proposition for us is definitely the idea of getting people used to, or reintroducing the idea of gold as your savings store. So when you save every month, you want to be able to do it in a savings store that's gold. The problem is that once it's in the dark, all you're doing is just hoarding value, and you can't use it for. Then there are many reasons why people want liquidity on gold. You could do it for financial engineering purposes. For in the short term, you might want to make use of that cash, or you just want that flexibility to be able to live in gold, to be able to say, I want the alternative, or I want it side by side with my current bank account. If I see the rand price or the rand is weakening, and my gold is more valuable, then maybe I want to realize some of those gains and use my gold card rather. So we think it's something that is it's a first in South Africa, and we think it's adding technology to physical gold that's not been there before. So we're rather excited, but again, we want your take, and we want to solve your pain points. So Maradis asked, can I use your platform to make an EFT payment? So at the moment, I think the question would be, if I am in gold, can I make an EFT out of it, or make an EFT using my gold? So at the moment, we're not offering an online banking service for this yet. So in order to realize your liquidity, you're using your card to spend with it. So at the moment, there are no EFTs. But be that as it may, you will know that there's a send gold function to other Troy users. So you can send gold and transfer gold to others that are on the platform using their mobile number. And we are not going to stop only at one tool for financial services. So the EFT option is something we are looking at, trying to find a way where we can realize that. So to bring it on par to what you're currently used to in your rand offerings. Let's just have a look. I just don't want to miss anybody here. All right. Guys, thank you so much. I think that's it. If I've missed anybody's questions, again, please feel free to get a hold of me, Dane at Troygold.app, or our team, support@Troygold.app. And I'm going to ask you please to get involved on our Telegram community. I'm going to ask Simone to post it on the live chat if she can. And also, it will be coming on an email with what will follow is an email with this webinar. And if you do pre-order the card, then you will get an info pack email, which gives you more information on everything that we've sort of truncated in today's webinar. Yeah, we invite you to please get started. Please join us, and thank you for your time. If there's any questions, give me a shout. I'll see you guys.